Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with David Morgan. How you doing today, David?
I'm doing well, thank you.
Great. Well, glad to have you in the show. For those of you who don't know David, David's an interesting guest. I'm glad to have him on this week. David, tell us a little bit about your background.
Well, my background is kind of fascinated about money. When I was a young kid, really 11 years old, the coinage changed from silver, 90% silver coins, dimes, quarters, halves. It went to what I call Johnson slugs, cupro nickel, and I was getting 25 cents a week allowance. And I saw the change in the coinage, and I thought, got to be meaningful. Silver's got to be worth more than these new ones. But most of the adults around me didn't seem to pay any attention to it. And so it kind of sparked an interest in how the system works. And I kind of self-studied. By the time I got into eighth grade, I, understood how the banking system works and asked questions about Constitution that was in class. And I found out it can snow indoors because the teacher snowed me because she didn't have an answer for why, if the Constitution says we have the law says you have to coin money, how come we're not doing that? So I could go on, but I'm a degreed engineer, aeronautical engineering, got in the aircraft industry, both the black and white sides. I was on the B-1 program, the initial B-1 bomber, and then I moved over to the Skunk Works that recruited me after the B-1 was canceled. But my heart has always been in finance. And so after a fairly good career in the aircraft industry, I moved into my heart of hearts, which is finance, and I've been on the web as a financial newsletter writer since about 1999. And I got a pretty big following, basically known as a silver expert, although that's true or false. You can pick up your own mind. But I look at all the markets. I've been a student of the markets for years, and I really try to convey an educational basis for why precious metals portfolio or any portfolio requires some precious metals to be a balanced portfolio. So back to you.
All right, cool. Well, I've definitely got some questions on the skunk works part of your career. We can come back to that. But let's talk a little bit about the monetary system. You obviously got started in silver early. I did as well. I've always been intrigued by silver, been following it for most of my career. And it feels like it's very misunderstood as an asset. And I think on all sides in the way I've seen it. But what's kind of your tell us a little bit about the silver market. Like give us some background of things that people should understand about the silver market that maybe they don't just by looking at a stock chart.
Yeah, I thank you for that. I think it's a great way to open up. Whether you're new to silver or you're kind of a seasoned investor in silver, I think these are the most high impact talking points I can think of. And first of all, the public basically is taught to believe that silver is a speculative metal. But the reality is, silver is the most strategically indispensable metal of the next decade. AI, EV, solar, grid expansion, quantum technologies, medical devices, advanced computing all rely upon silver, and there are no substitutes at this time. The supply of silver is flat to declining. From about 2016 to present day, there's been a very slight decline in the amount of silver mined on a global basis. Slight, but it's there. The trend is clearly there. The above ground bullion stocks are tight and probably as tight as they've been for some time. We've been in a structural deficit. According to the Silver Institute, Metals Focus, and a couple of notables that study all the metals for at least 4 years. So the message here is that you can't ignore the narratives, but you should pay attention to the facts. And I outline the facts. Industrial demand is rising very rapidly, and supply is not matching. So it makes it really the most undervalued asset class in the hard asset space. Gold is probably somewhat overbought, and I think it's definitely going higher, but it's been quite a run. And what's the correct price of gold? The market will determine that. The reason I say silver is undervalued is the historic ratio of gold to silver in modern times is about 50 to 1. In classic times, when both are money and money alone, it was about 16 to 1. Right now, we're getting close to about 70 to 1. So, basis what the value of silver is relative to gold, it's still undervalued. So I'll stop there and we can press on.
Okay. Yeah, no, so it sounds like I mean, because it was up to like 100 and change to
Correct.
one, which was the highest I think it's ever been, right?
Correct.
Um, and now it's down to 71, which I guess is better, but still not, is not within equilibrium. So let me ask you this. So I've followed silver for a long time. I've heard all of the speculation around silver. I've heard it all, as I'm sure you have. And I don't know how much of it's true, how much of it's not, but I would think so. That for the listeners who don't know, the speculation is that the silver market's being manipulated in large part by institutions. I mean, who the hell knows, but institutions. And I always found it interesting because if there is that structural deficit, wouldn't that naturally propel the price higher? But it doesn't always seem to do that. So, what do you think is going on where silver is not acting as if some of the things that people talk about it's not acting as if it was in a free floating market?
Yeah, an excellent question. And thank you for giving me the platform to dive deeply into this topic because I think, um, ego aside, I have probably one of the better takes on that question. First of all, I've been very consistent from the early days when I started the Morgan Report. In fact, the initial report was called the Silver Investor. And I quickly changed it to the Morgan Report because I do a lot more than the silver market, although that is my favorite specialty. So the structural deficit is there, but my statement is you cannot manipulate the long-term trend. It's pretty obvious. Gold was 252 in 1999. It's hit 4,400. Silver was under 5 in the early 2000s, and now it's approaching 60. So the long-term trend can't be. However, within that trend, the price can be managed again and again and again, and it has been. So I was asked, many were asked. I was one of many that were asked by basically two really good friends of mine to debate whether the market's manipulated or not. And I thought, well, rather than get into he said, she said, blah, blah, I thought I would take the time to illustrate fact after fact after fact and put it in writing, put that writing on my Twitter account and post it for everybody to acknowledge. And what I did was I gave, I think it was 6 or 7 instances where the courts have ruled that it was quote unquote manipulation. I put manipulation in quotes because the court uses the word spoofing. And at the end of my dissertation that showed $920 million fine by JP Morgan, some going to jail, and all this basically around spoofing, that in a court of law, if I had to produce the evidence and produce the word manipulation in the findings of the court, the word manipulation would not show up. So if you want to get technical, we could say, well, David, you're wrong. There's a manipulation. The court says it's spoofing, but they're the same damn thing. And that's what I said at the final paragraph of my dissertation on market is managed. It's been managed. There's reasons for the management of it, but you can rest assured that the long-term trend can't be manipulated. The long-term trend is up. And in a way, the management of keeping the price less than it would be in a free market has actually been an advantage to silver stackers.
So let me ask you this because we recently had a spectacular month in September with silver, and certainly parts of October. Um, and I've been following silver for a while, and I've been shocked for the last few years that it's just kind of been sleepy and just been going sideways. And it didn't really kind of break out until the summer, late spring and early summer, where things started to pick up, and then it really took off in the fall. Why why would something like that happen? Like, did anything change dramatically that would cause it to all of a sudden September, October to just skyrocket and the last 4 days to skyrocket? And obviously this isn't live, so you can go back and listen after the fact as to what happened. But we've been seeing it almost the nature of my question is the silver market feels like it's broken. Broken in the sense that whatever was managing it is no longer managing it. or it is not managing it very well. Because the prices shouldn't really do this in a normal market where it's not like a crater of silver fell from the sky. It's not like we all of a sudden came up with a new technology, 2 months ago that requires silver. Like the dynamics have been generally constant. So why would something like that happen? Like, is there something going on under the surface, or what do you think's going on?
Well, I don't, I'll be as bold as to say I don't think I know. And one of my most basic premises from the get-go, from the time I was interviewed on my first interview about the silver market, it was this that the silver market is a derivatives market. It's a paper market. And you could create the illusion of infinite silver in the futures exchanges. And as long as there's enough physical to meet the demand, that illusion will continue on and on and on. But there will be a day of reckoning where the physical silver supply takes the reins and that horse runs. And that's the shift that's just happened. And it just happened really within the last couple of months to my knowledge, which means that no longer can you really use the management process as well as you could in the past, where if the price starts to get away from you, you just sell a bunch more paper. That paper suppresses the price because it acts as if it's physical metal into the market. But now, if you're China, you're India, you are an ETF, you are someone that requires silver for investment purposes and or industrial purposes, and that demand is late, or it has to be sourced from somewhere not nearby, and they have to pay a higher price because of an arbitrage opportunity. All these things are playing in the silver market, which shows me, and I think many others, beyond a shadow of a doubt, at least temporarily, perhaps onward, that the physical supply is actually setting the price. And that is what I've waited for a very long time. Again, let me repeat, I think it's absolutely what's happening now. But Kirk, I've got to keep my engineering brain intact and say, look, it could be a 1 month event. And January of next year, there's enough supply to kind of quell the market, and the market falls off by $10 over a 2 week time frame or something like that, and we're back in quote unquote equilibrium. But having said that, it's doubtful. I think we're at that edge where we could be, you know, just like it's like filling up a swimming pool as an analogy. There's a leak in the swimming pool. So you turn the hose on, you fill it back to normal, and then you say, oh, there we are, and you turn off the water, and all of a sudden a bunch seeps in. Oh my goodness. And you turn the water on, and it takes longer to fill it back up, but you can for a few more times. But eventually the drain is so strong, no matter how much you turn that hose on, it's not going to be able to fill the pool. So maybe a corny analogy, but I think that's a good one because I think we may ebb and flow back and forth where it looks like it's in equilibrium. No, it's not. Yes, it is. But I think the trend is the physical market is finally going to set the price, which means we actually have a free market again, not a derivatives based market.
Right, but where is the demand coming from? Because
That's,
if
yeah,
it, because if that is an increased demand,
yeah,
the demand's coming from somewhere.
you
And
bet.
I can tell you from just working with individuals all day, it wasn't coming from retail. Retail didn't pick up on it until really the
Absolutely,
end.
absolutely true. Yeah, the demand is coming from the industrial side, not the retail. Retail's been selling back. Wholesalers are stuffed full of metal. In fact, constitutional silver was thrown in the trade as junk bags. I mean, I could buy them through my wholesaler $2 under spot. I mean, they want to get rid of this stuff, but yet there's this shortage in the industrial bars. If you think about the silver market the way I think about it, the silver market, as I said, is a derivatives market. It's a paper market. But there has to be the physical 1,000 ounce bars to make up or to make correct the amount of actual physical metal that is 1% of the paper market, but it has to be there. If that didn't exist, you couldn't run these games. So now those 1,000 ounce bars needed for industry are in short supply. Some of those 1,000 ounce bars are used as investment demand. But because of that fact, we're in a situation where, again, the physical market's actually taking hold. And that's what's causing it. Retail's backed out. Retail doesn't believe it. Retail says, oh, finally, I bought it at 35. I waited 10 years. It's at 40. I'm out of here. Get me out of silver. I had it for 10 years. I'm sick of it. And that's basically the attitude of most retail investors right
Yeah, and I think that was kind of the point I was getting at is that I was getting calls from a lot of older clients, like retired people. They're like, "Oh, is it a good time to sell my silver?" I'm like in the middle of the biggest like month that we've seen in silver in like the longest time. Like, no, no, not yet.
now. No,
Um,
yeah, you're exactly right. If I could just show you a chart real quick, I think this will explain it better. The old adage, a picture's worth 1,000 words. This comes from my friend Matt Watson. He's an independent analyst in the metals markets. He looks at all of them. In fact, some of the ones I can't even pronounce, Kirk, like iridium. So this shows the silver market very briefly. The black line is the mining activity from 2010 to the projected 2050. The red line above it that is in parallel with it is total silver supply, which is the black line, mining and recycling. And what you see that on the left side, that 1.0 is 1 billion ounces of silver. That's about what we get from mining and recycling every year. It's tapering off slightly to the right because recycling's been static and will probably remain so. And mining activity, as I said earlier, has been decreasing since 2016. So we could keep it at that. I think that's accurate, but times change. So what you see above the red line is what has to be taken from the above ground supply. So supply and demand to meet, we got to get it from somewhere. Oh, there's like 3.6 billion ounces of silver in investment grade form that we can eat up. And that's what's been happening in the last 4 years or so. So you can see from Matt's graph here that we are in a deficit situation projected for the next 25 years, and it keeps increasing every year. Where I think he's incorrect isn't all his industrial ideas here with automotive, solar voltaic, uh, ethylene oxide, electronics, semiconductors, and everything else showing in this. Where he's wrong is the gray or silver bars. Those are investment demand, which is the margin. All markets move at the margin. It's the last bidder at the auction that gets the automobile or the house or whatever it is. So, as a bid offer situation, the industrial users are going to not care about price at some point. They're going to care about ounces. If I've got to have 225 million ounces every 2 years to run Tesla, I'm going to tell my logistics person at some time, I need this many ounces, regardless of price. Because if I don't have silver, I'm out of business. And the margins on silver on a Tesla are almost ridiculous. If you use 5 ounces in a Tesla automobile at $50, 5 times 50, $250 for an automobile that costs what, 45,000? So it could go up tenfold, and it wouldn't matter to Tesla because the margin on the end product is so much greater than the capacity to carry the silver required to make it a Tesla automobile. And that's true in almost all of industry. Now, on the investment side, when gold gets too high priced, people start looking for the benefits of a safe haven, and silver is a lot cheaper, better understood in some capacity outside of North America. You look at India, you look at Asia, you look at that part of the world, even in Europe, some of Europe looks at silver as an equal to or perhaps better than gold as a monetary asset in hard times. So I think the only argument I'd make with Matt is that that is not a static amount of demand on the investment side. It will continue to grow in my view.
okay. So, um, what do you think for? So I got a few follow-up questions here. First, why is there not more supply coming online? Like that would obviously solve this problem if the people influencing the price wanted to. They just have more come online. So why not?
Yeah, absolutely. Two reasons, really. One is it's a derivatives market, so the paper supply has made the illusion that we have plenty. But the second and most important part is a fundamental fact, and that is 70% of the silver that comes out of the ground every year is a byproduct. So 70% of silver is mined by lead, zinc, copper, and gold. So lead zinc mining produces 35% of the silver supply. Copper mining produces 25% of the silver supply. And gold mining produces roughly 13% of the silver supply. Copper, lead, and zinc miners, the big mining houses like Rio Tinto, Broken Hill Properties, BHP, those conglomerates that mine vast amounts of metal use silver as kind of a rounding error. They could care less what the price of silver is. They care about copper, lead, and zinc, what those prices are. So there isn't any impetus for them to mine more silver. They actually use silver, as I said, as an accounting thing. They use it as a credit to their costs. They don't look at it as an asset they sell. So most of the bigger bullion banks are in bed with the largest producers, and they can take their book knowing what their physical amount of silver is and use it in the derivatives book to basically use their methodologies to keep the price basically where they want the price to be. So now only about 25% of the silver market comes from primary silver producers. And even a primary silver producer, such as Pan American, that's one of the best, has mines all over the place. It's not just a one mine operation. But even there, there's not anything as a pure silver mine. They're mining silver as their bottom line. More than 50% of their net comes from silver, but they're also pulling out gold, lead, zinc, copper in most instances. So it's impossible almost. There's only like one really pure silver mine left. There used to be more than that. So that's your answer. There isn't any impetus to increase the supply because you're not mining silver as a primary asset in the lion's share of the mining industry.
But, for the people who need silver, right? The Teslas and the companies that make silverware and, power distribution jewelry, all that. Obviously, they're not making money on the margins or the spread. They just sell it. They basically just sell the silver with the spread built in. It's like jewelry. It's like whatever
Sure.
silver is, just add, 50%, and that's our price.
Right.
So they don't really care what the price is, but they do care about getting it. So
Yep.
why don't these other companies who have a lot to lose by not having enough silver, why don't they make a push to increase the supply of silver?
Well, that's a great question. I really can't answer it, but I will give you an answer. There are some forward looking companies. One is named Samsung. Samsung would not exist without silver. And for years, they have had a direct relationship with Avino Mines. And I know David Wolfram quite well. I've known him for over 20 years. And so that forward looking company says, I don't give a fig about the price, really. I need silver or I'm out of business. So they have a direct offtake agreement with Avino. They're one of the first to do that. There are a few others that are hearsay, so I won't announce them. I can prove the Samsung one in writing. But I think you got to be forward looking. I think this idea of just in time inventory that's been so pervasive in the modern world about how we stock Walmart, how we stock Costco. Everybody just thinks you just use the magic computer formula and you don't have to have a warehouse. It's on the road, it gets here just in time. You put it on the shelves, the consumer buys it. And that kind of an attitude is incorrect when you have a continuing deficit and a continuing demand that won't abate going forward, and that's the silver market. So I think the answer is I can't answer for those companies, but I can give you an example that I just gave you that there are companies that see what's coming and prepared for it, I'd say years ahead of time.
Yeah. One thing I've always been curious about is I've been following the uranium market quite a bit, and I've noticed that the price of the uranium market, it's there's two prices. There's the futures market, and then there's what everybody else pays. And it seems, and it's a skinny market, so not a lot of people are in it, and not a lot of people even know about it. And it's not even one of the main futures. It's just kind of one of those second or tertiary futures markets. So but that market's highly fragmented in price. It's just in a weird sort of way. You wouldn't even understand why it works that way. Um, I wonder, if I think about, like during COVID, uh, mints were shut down, mines were shut down, and yet gold and silver prices dropped. And I always look at that. They should have shot through the roof. Like you're not making this stuff anymore because everyone's not working, and so there was this huge discrepancy, and I was shaking my head thinking like, I mean, people should be buying this hand over fist, but they weren't, and so it makes me wonder, if we are having more reasonable price discovery, why aren't we seeing it in times where they naturally should float with the supply and demand? Like, what is gonna? I know that the futures markets, the exchanges have a lot of ways to kind of break an accelerating price, but like, how do you know if the price is actually going in the direction it should, as opposed to where it's being managed?
A couple things there. One, I'll push back on you a little bit, Kirk, because you are right. When the illness started, silver dropped to, I forget the exact price, but somewhere I think around 12, and it went there very rapidly on a waterfall decline. And I bought more at that time, and I bought within 1 day of the exact low, but I bought physical. And I called my dealer the next day and said, geez, I gooned it. It's down another buck today, or buck and a half, I forget. I said, how much would I have saved if I bought today? He said, basically 50 cents, because the physical market from a wholesaler was a different price than you see in the paper market. Now, I could have been in the futures market, could have bought 3 contracts or one, could have bought a mini contract, 1,000 ounces, stood for delivery, and probably got the metal, but not necessarily, because the exchange has the ability to send me a nice letter and say, well, you're a little pipsqueak, Mr. Morgan, and your 5,000 ounces, here's a check. You signed the contract that says we can settle in cash. Here's your cash. Now keep your mouth shut. So that could happen. Going back to what you said, Kirk, I think you answered your own question. As long as the paper flies around enough for people to believe it, they can control the price within certain parameters. And because of that fact, you have to get to where we are now, where the physical reality of commercial bars, not retail product, takes command of the physical price. And that's what we're seeing. Will it continue? I believe that it will. Will it correct, or will there be enough product produced? I mean, look at the refiners. They're not refining stuff for, kilo bars or 100-ounce bars. All the 999 fine silver that's coming back to the retail markets going directly to refiners, put into commercial bars only, because that's where the demand is. And that's the real quote unquote silver market, because that's the one that backs up the paper paradigm.
So where do you see opportunities now? I mean, obviously we haven't talked about gold at all, but where do you see the opportunities now? I mean, silver's taken off a little bit, but going forward in the next, I don't know, 12 to 36 months, how do you see things shaping out, and where can people be looking for opportunity sets?
Well, the true opportunity is undoubtedly a fact that if you buy strong blue chip silver mining companies, you're basically buying a $5 bill for 350, because the reason that these companies sell for a certain price is based on their earnings. And the new earnings that these silver conglomerates have, like a Pan American Silver, First Majestic, Wheaton Precious Metals, Agnico Eagle, some of these companies have not yet reflected the new price in silver. And once they do, their stock price will catch up to their earnings. So it's sort of like getting a crystal ball and looking into the future. Price of those companies is based upon $35 an ounce silver, and we're at almost $60 an ounce silver. So that's the number one place to be. That's the way to catch up to people that bought silver at $30 the ounce or 35 the ounce. Now, if silver is on a popcorn rally and this $60 print or near it backs right off, and 2 weeks from now you call me up and say, David, I don't know what you said, but we're right back down to 50 again. What's going on? That's the silver market. It can surprise anybody. But even at 50 or 45, those margins are far greater than what the stock price is telling you now. So that's the opportunity.
Yeah, I mean, it's a great point. I wanted to ask you about the miners as well. I've noticed I've followed the miners, and I heard a good framework a few months ago that I thought was really well put, which is miners are basically the consideration for miners is the spread between energy and the price of the metal. So you put in energy in, let's say oil, put oil in, and you get gold out, and the spread is really wide right now because oil's not very high, and of course the price of the metals keeps climbing. Um, but I've noticed that the mining companies have been really slow to the party. Um, sure, they've done well this year as silver has, but typically, I think of miners as like gold or silver on steroids. Junior miners being the miners on steroids. So it's one of the craziest markets out there in terms of volatility. But I would have expected more from them. And I'm not saying, I just feel it feels like they haven't caught up yet. And I'm wondering why. And I'm wondering like what is going to cause because I mean, a lot of people don't even have miners in their portfolios. Like it's considered one of these nuisance things that portfolio managers put in because they have to, but they don't really want to. So what is going to cause people to kind of change their mind about the miners and actually start to see volume flowing in so the price accurately reflects the value there?
Yeah, excellent question. Let me break it down a little bit. First of all, there have been years where a lot of my friends that are bullion dealers only will make the statement, why bother with any mining company whatsoever? The bullion itself is outperforming a miner. And why have that added risk when you can get the end product and do just as well? And that has been true on aggregate when you take them all together and divide by the amount, the average. However, this year, both the HUI and the XAU have done a 2x on the price of the bullion. So they are outperforming. Now, in a bull market, the normal outperformance of a good mining company, I'm talking blue chip or a near mid tier that's a producer, it's a 3x, and we're only at a 2x. So that validates what you just said, Kirk. These things aren't really responding. I think it's a lot of things. Number one, I think the fascination with the AI and high tech is the only way to get rich in the stock market. I also think that there isn't there's hardly any value investors left. In business school, we talk widgets. I mean, widgets, as you probably know, and most of the audience, it's just a fictional product. And how much does it, what are the input costs? What are the taxes? And what are the output costs? And what's the profit margin on that widget, be it gold, be it a dress? And I don't think that Wall Street even looks at the miners. It just has been something on the back burner. But once those value computers run their algorithms and say, wait a minute, the highest margin companies on profit right now are, these three gold companies. They have to pay attention. Now, who's front run that? Well, your Druckenmillers and some of the best names in Wall Street that do think outside the box have already positioned themselves into the Newmont minings and some of the top tiers. So I think it's coming. I just think it's a delay. I really think it's the fascination with, first of all, what generation is in Wall Street right now. I mean, gray hairs like me are usually retired. And the other thing is that they have so much belief in modern technology and the algorithmic function of the computer knowing more than me that it'll help me guide into the most profitable asset classes. I think it'll catch up. I do think, as I said, I'll reemphasize, that's where the opportunity is. If you're new to this market, you're all in, tech and consumables, whatever, and you think you have a balanced portfolio, you have no exposure whatsoever to the money metals, a good way to get it is to get into the top tier cash rich unhedged mining companies, or better yet, what we specialized in from the beginning of the Morgan Report, and that's the royalties company, where the oil equation that you put out doesn't really hold because oil isn't going to affect the royalty companies like it does the normal mining.
Yeah. Okay, cool. No, I like that. Um, so last question before we wrap it up here is uh, I know there's been a lot of discussion about this with the cryptocurrencies of the world as being the electronic gold, and people think that that's the new, it's taken the place of precious metals, which At some level, I do wonder how much of that market has gone there, the traditional gold and silver market. The investors, I'm curious how much of how many of those people have naturally moved some of their cash over to that market, which I imagine the some at least. Um, but how do you think all that plays into, the precious metals story? Because there's obviously been thousands of years where it's been valued, and I don't think that'll change. But um, do you think that um, the like Bitcoin market, using Bitcoin as an example, is going to capture a lot more of that market of people looking to disconnect from the traditional monetary system and protect themselves, or how do you think all that plays in?
Yeah, that's another great question. I keep complimenting you, but they are. I did a series. It's called The Crypto Conspiracy. And I did 30 podcasts taking the crypto market and starting primarily with Bitcoin and then drilling down. I can build the argument that Bitcoin definitely took assets away from gold and silver. In other words, money that normally would have flowed into an alternative monetary system going to gold and silver got, I wouldn't say usurped, but certainly diverted into Bitcoin primarily and other asset classes. So I actually did a lecture at the Silver Symposium a couple of years ago based on those 30 podcasts. In fact, I don't think I completed them at the time I did the lecture. And the Bitcoin realm is about 1/10 the size of the gold market. So certainly that's enough money to have moved the gold market had that amount of money gone into gold. But silver is such a small market relative to gold, it certainly would have affected the silver market far more. And there's anecdotal evidence. One of my best friends in Canada runs a bullion dealership in Vancouver, BC. And he told me story after story of guys coming in with their pickup trucks full of monster boxes of silver maples, dropping them off, getting cash, and buying Bitcoin. And then some of them would sell the Bitcoin, come back and rebuy the more monster boxes. So certainly it's diverted it. How much, I can't tell you. But I think when Mr. Epstein and several from MIT, we did a deep dive on this, Kirk. We showed who's who in the zoo, where it originated from, who's behind it, was the NSA involved, and what was the real purpose behind Bitcoin. And the article I wrote, my two bits about Bitcoin in 2016, which is a few years after it started, pretty much hit the mark. And I said, if this really is something to divert power, the money power from the money power elite, believe me, they will take it over. And they have. It's basically the opposite of what the white paper stated. And it is not anonymous, it can be tracked. It has to go through an exchange. And basically, the whales have taken it over, and Wall Street now has constructed ETFs that basically control the price, just like they do with a lot of other assets. So, yes, we call it a psychological operation. Sounds conspiratorial. You can think of it in that way. But if you took that amount of money and put some of that money into the precious metals, it'd certainly be a different price than what we're facing.
Well, I've actually had a similar theory about Bitcoin. And for those of you audio viewers, I'm wearing my tinfoil hat again. Um, I've talked to a few people and gotten some people are cryptographers, people with let's say credentials that if there was a Satoshi, they would know what it was. And I've talked to some people in government, and there's two theories I've had on it. One is it's a group of cryptographers that just kind of created it, and that's kind of the story that I think everyone would love to hear. But I've talked to some other people in government who said, they don't know this for a fact, but it sounds like the kind of thing that would come out of come out of DARPA or something like that, like a small project they just fund and just see where it goes, and then it turned into something, and turns out that I'm not sure it was planned this way, but I think it like turned into something, and then they took it, and of course. All my Bitcoin friends, I'm just like, they're like, oh, it's great. It's freedom and money. And I'm like, not really. Like they can track your money. If I have cash, they don't know where I'm spending this. But if I have Bitcoin, they know exactly where I'm spending this. This doesn't sound like freedom to me. Why are you bamboozled with this? And So I keep an open mind because who the hell knows, but I just know what it looks like. And to me, it looks like a lot of people who were initially really excited about it and have made a lot of money, of course. Um, to me, I'm not excited about the freedom part of it because it doesn't seem better. It just seems different. Sure, you can keep it in a wallet and keep it safe and put it in your bank vault, but you can't ever spend it because once you do, they know who you are. And so, what's the point? Um, so, I appreciate you saying that because I'm not for or against. I just find it all interesting, and I think if you're considering assets like that, you should know why you're owning them. But as we kind of wrap it up here, I want final thoughts from you, and where can people find more about you?
Well, final thoughts are I've written three books on silver primarily. One's Get the Skinny on Silver Investing. It's a primer. It's unavailable. I mean, you can probably get it on Amazon. It was a $10 book. It's just, again, a primer. Um, then I wrote the Silver Manifesto, and that's kind of the Bible on silver investing. It's more for academics or student market students that really want to know the ins and outs of silver investing primarily. And then the last one I wrote with David Smith, it's called Second Chance: How to Make Big Money in the Coming Gold and Silver Tsunami. And that one has more to do with investment techniques that apply across the board, not just to the metals markets. But after I accomplished those three, I decided it was kind of nudged to do a documentary, which I finally finished after 2.5 years. It was released for free for everyone. And it's at the URL silversunrise.tv. The name of the documentary is Silver Sunrise. And the subtitle is Overcoming the Stress, Fear of Money for the Population. In other words, the money powers basically control a lot of what we do. And it's regardless of what political stripe you're in. It applies to communism, fascism, democratic society, a monarchy. It doesn't matter. As Shield reportedly said, give me the power to create the money, and I care not who makes its laws. So if the laws are fascist, the laws are, libertarian, the laws are whatever, it doesn't matter. If I create the money, I control the government. That's basically what I truly believe is the way this world works. Now, the documentary takes kind of that spiritual side. What if we had, I'll call it free energy. Being an engineer, I'm not even supposed to say that, but let's say a very cost effective energy. Think of how the world would change. Think, the oil market would be persona non grata if we had the energy we could just, get out of the atmosphere, for an example. So we look at those type of things. I'm not saying that's even possible, although there are, we could go down a rabbit hole and not have time. But really, I think we've got this thing upside down, especially in the West, because success that we're taught from the time we're a little kid comes outside of ourselves. It's what car you have, what house you have, what business you own, maybe what your wife looks like, she's trophy or not, all this external push for success. The real success comes from just living a good, decent human being, just a life that really resonates with integrity. And that is something I wanted to put into this movie. So that's kind of the gist of it. Obviously, I left the comments open, which I don't normally do because I want feedback. Will I do a sequel or not? I'm not sure. I would very much like you, Kirk, to watch it and send me a private email. And if you like it or don't, either side, I would still like to engage with you about it. And my question would be like a discussion back and forth. And I would say, Kirk, if I had you in the movie and I asked you that question or these questions, what would you say is the most important thing to get us back on track? Is it education? Is it whole food? Is it, more socialistic government? Is it, what is it? How do you see this? Because we are at a point at the end of the age of empire where we are going to go through a shift, whether we want it or not. And we do not have the amount of control that most people think we do. We're running out of time as far as this paper paradigm goes. And I'm not talking about the silver market. I'm talking about printing paper and pretending it's wealth. That's coming to an end because you can't print wealth. We're starting to see that in the inflation base and how badly the American middle class is being destroyed.
Yeah, I would say it's responsibility for one's own actions. It always starts there. Somebody said this a while ago. I forget who said it. They said you never get the politicians you want, you get the ones you deserve. And so you want better politicians. It's up to us. We're the ones that vote them in, assuming that our vote counts, of course. But you vote for some, you know, clown and you expect better results. Like, good luck. Like, good luck, New York. I'm glad I don't live there.
Yeah,
Like, good luck to all you, because that's going to be a disaster in the making. So, maybe that's the point of New York, to be an example for others, so that you don't go down that path. And I hate to say it, but sometimes people need a reminder of what wrong decisions happen. But no, I'm in agreement with you. There's a lot to it. It's not simple, but I think people need to start taking responsibility for their own actions and frankly, um, grow up. Would be
yeah.
the way I would put it. But no, I appreciate the insight. We'll definitely chat more. Well, David, I appreciate you coming to the show, and we'll definitely have you back on the future because I know silver's in a bull market, and we'll be talking. We've been talking about this for like the last year, telling people like, "Hey, look at what's going on," and no one's looking. But our listeners know we've been talking about this for a while. So I appreciate your insights, and we'll definitely have you back on the future because I think this is a trend that's not going away soon. So thanks again for joining us.
If I could just interject one more real
Yeah.
quickly, we will have a URL for you. You can put out, and this will give your listeners, viewers, the ability to chat with me for 15 minutes. That's a $250 value. And if they're interested, I could set them up with probably one of the best dealers in the country as far as premiums are concerned. In other words, buying metal for a modest premium rather than some of these more aggressive premiums that exist in the market.
Okay. Awesome. Well, send that link over. We'll add that in the show notes for our listeners, and they can they can go there to look as well. So thanks again for joining us, David.
My pleasure. Thank you, Kirk.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. Mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room.
All right, that was a great interview with David. Really appreciate him coming to the show. Now into the panel portion of the show, we have our very own Barb Freeberg. Hey, Barb.
Hello, everybody. Happy to be here.
Yeah, glad to have you here. And we also have our very own Diana Perkins. Hey, Diana.
Hey Kirk, hey Barb, always great to be back.
Yeah, well, glad to have you both. So, Barb, what were some of your takeaways from the interview?
Well, I always like hearing about trading in commodities, trading in gold, trading in silver, and particularly recently with the huge uptick in prices, People are super excited about them. And so I think we have a lot to talk about. But as someone who has been really following the markets for over 40 years, those that have just gotten excited with the uptick need to have a little bit of perspective and understand the potential downsides as well as the upsides of investing in silver, precious metals, and commodities.
Yeah, great. So, Diana, what about you? What are some of your thoughts?
Mhm. Yeah, so one point that came up was the idea that the large silver miners are undervalued in the stock markets because earnings haven't caught up to the higher silver prices that Barb was just talking about. So, as someone who's been trading the markets for about 18 to 20 years, somewhere in there, from an equities market perspective, I wanted to point out, expectations tend to show up in stock prices well before earnings are announced. So for me, the key question is whether those higher silver prices are already reflected in valuations rather than assuming that stocks will automatically catch up. And we've seen this in other industries as well, namely the larger technology firms, the big chip makers, where they are killing it on beating analyst expectations, top line earnings, revenues, forward guidance, yet the stock price drops. We've seen this Nvidia, Microsoft, I could go on and on. And so from a market perspective, they don't ask, did earnings go up? It's did earnings exceed what we already expected? And we see that time and time again.
All right, great. So, we've seen we're this is the end of January 26 right now, and silver is at all-time high, as it pretty much is every day. And it's things have seemingly kind of come off the rails. It's not a normal price movement in a commodity or really anything. And last year, maybe 10 months ago, it was $25. Now it's at 110, and that's kind of crazy. So, how do you think people should be thinking about this, Barb? Should we be going all in, or should we ignore it, or how should people be thinking about silver?
How much time do you have?
I've got an
Okay.
hour, Barb.
Okay. Well, buckle up, guys, because I have an opinion on this. Investing in things like commodities, silver, gold, etc., you are not paid to wait. So you have no dividends. The only reason you're investing is because you hope the price will go up. And if you check out the charts of silver, gold, a lot of precious metals, and you go back, there are decades with no movement. So those of you that have invested, the past year or two thinking, wow, this is insane. I can get multiples of growth. Step back a little bit. Pull up the chart, Kirk, because I want people to see. I actually am looking at a chart on my own screen starting in 1995. And from 1995 to about 2011, no movement. And then it went up, up, up to about $50 an ounce. And then went back down to an average of about 16 for about another 10 years, stayed there from about 2012 to 2024, and then it has catapulted up. Great. So if you invested at the peak in 2011, it has taken till 2025 to see any movement at all. If you're okay with that, then fine. Personally, I would not put a lot of money in the precious metals or commodities because I don't want to sit there hoping for appreciation. I want an investment that I can check on the fundamentals like a stock and see what is driving the growth of that company. I can look at their numbers, their price earnings ratio, their debt to capital ratio, their price to sales ratio, and see how is that company progressing? I can listen to their annual report and find out what their growth prospects are and then make a decision. So you're investing in commodities for a hope that the price will go up.
Okay, good. Diana, what about you? What are your thoughts? You're a trader. I'm sure you've got plenty of thoughts on this.
I do. I do. And you've heard me say this before, and I'll say it again, is trade the market in front of you. Now, that chart that Barb just showed, it tells quite the story. The price action, as we call it, has gone parabolic. So typically in the stock markets, for the broad market or any individual stock, or in this case, commodity, you typically see undulations, right? There's buyers that come in, then there's some selling or profit taking, you see a pullback, and then you see maybe new highs form. But what we're seeing here, it's a parabolic movement, meaning it's going straight up, right? The price is moving straight up with little to no relief. So when we see something like that, the key is to not chase, right? Clearly, we're extended from our averages. So typically, depending on the time frame that you trade, you might look at the 20-day, 50-day, 200-day simple moving averages, right? Whatever average you're looking at out of those, we are clearly extended. That said, if you already have a position in silver, oftentimes what traders will do is put on a trailing stop. So you're essentially playing with the house's money, right? And if it does find relief or pull back, or as we call reversion to the mean, back to its averages, then you have that protection on the downside. But I always say, when a chart's tanking, you don't want to catch a falling knife. Similarly, when we're seeing this parabolic movement, you don't want to buy at the highs necessarily. If you do, I would just make sure your risk management is ultra tight.
Yeah, I think that's a good perspective. I think, given what we've seen in like the last 5 years or so, I mean, Nvidia took off like a rocket and just kept going. Tesla did that years ago, took off, forget the pun, like a rocket and kept going. And silver's doing the same thing. And I think it's hard because if you weren't in early, and you feel like you missed the boat, I mean, silver could go to $1,000 an ounce. I don't know. I mean, no, nobody does. I don't suspect it will, but anything could happen. And so, you could look at it one way, and you could say, well, it could go to 1,000 an ounce, and it's only 10% away there. Okay, I want to jump in. Or you could look at it as like, hey, maybe this is the absolute top, and then it goes down to $50 again. And so, one of the challenges of investing or trading or trying to make money in the markets is figuring out where the future is. I think one of the biggest challenges that I see with precious metals, especially, is there is a monetary component of this. There's a global monetary component. And we've talked about this in some of the Friday live shows, but it's the move started with gold, and then it went with silver, and then it moves to actually platinum, palladium around December started to pick up, but started with gold, then silver, and then copper and steel, and now all the metals are taken off. Uranium, the same thing. I think one of the questions is, we're talking about commodities here. It's not all commodities. Not all commodities are doing this. So the real question is, should people start to get involved in commodities? There was a time prior to 2000 where people talked about stocks, bonds, and commodities. But they don't talk about commodities anymore because they've been out of favor for like 25 years. So is this something people should be thinking about, Barb, as if for nothing else, yes, it's not a company with earnings, but if for nothing else, a piece of diversification for the portfolio?
That's a really good question, Kirk. And that's a personal decision because you can be pretty well diversified with a couple of ETFs or mutual funds covering the entire world stock market and either the US or the world bond market. And in fact, some of the robo-advisors who create the portfolios for you with digital management, for example, the Vanguard robo-advisor, I think has 4 funds in it. So if you believe Vanguard knows anything, you can be pretty well diversified with 4 funds and capture most of the gains of the stock and bond market. But that leaves the question of, well, what about commodities? And I believe that is a personal choice. And it's a personal choice how diversified you want to be. And in order to make that decision, you need to educate yourself a little bit. You need to understand a little bit about different market sectors, what their past history has been like. Like you said, Kirk, we don't know where silver's going to go in the future. We have no idea. Now, if we can believe our guest that there is tremendous demand and limited supply, well, that would suggest it's going to move up. But that hasn't been the case in the past. So, my answer to your question, should I invest in commodities in my portfolio or not, depends on whether you want to sit on an asset that might be flat for decades, or whether you want to go with an idea that there's limited supply and it's going to go up and add some to your portfolio. Whatever your decision in, my rule of thumb is don't put more than 5 or 10% of your total stock and bond diversified portfolio into, should I say, more speculative assets, be that Bitcoin, be that commodities, be that gold, be that private equity, because it could be a great diversifier for your investment portfolio. But then again, you could be sitting on something that does not grow for decades.
Yeah, that's a good point. So, Diana, what are your thoughts? Because I know, we have a lot of traders on the show from time to time, and kind of the sentiment I get from many of them are they're just buying something that's moving because most of them have a technical background, and so as long as something's moving, then that's how they're trading it. It has nothing to do with fundamentals or anything like that. It's just clearly, hey, this thing has a chart, and I'm trading the chart. So, how do you look at things like this? Do you have fundamentals in what you do, or how important is that when you're trading?
Yep. Yeah, so I see commodities more of an option rather than a mandate. And what you just described, I think it completely comes down to your time frame. So if you're a day trader and you're looking at intraday charts, or swing trader, which is what I specialize in, then yes, you're going to rely heavily on charts and what we call the primary indicators, which are price action, basically stock prices moving up and down, and volume. And then there could be other signals or indicators depending on what your preferences are. But because we're in and out of a particular chart in a relatively short period of time, anywhere from a few hours to maybe upwards of 4 to 5 weeks, we're going to rely very heavily on charting. Now, personally, I do layer in some fundamental analysis. Personally, again, every trader is different, and for me, I'm looking at competitive positioning. I'm looking at upcoming earnings. I'm a trend trader, so I want to know, is something going to buck the trend during my holding period? I'll look at, analyst expectations, and I'll look at what's in the news. So again, are there big headlines happening with this company that essentially brings in headline risk to my trade? I like it to be a little bit boring, but I do need a move. Now, if you're an options trader, the beauty of options is that you can make money whether the price action is going up, down, or sideways. So there are strategies out there where you can profit from no movement, and you're looking for maybe a sideways market, some really, I'll call them boring sectors that are moving, churning sideways, and then you find stocks within that. We call that top-down analysis. So really with trading, you can make money in any market. Many traders are momentum traders. They want to see that move, and we rely heavily on stock charts because of the time frame that we're in. Now, from a fundamentalist, long-term investor, yes, you want to know the management team. What is their product positioning? you want to look at their valuation if you are buying and holding for a long term. So I think it's different perspectives. There's definitely a place for both technical analysis or charting and fundamental analysis, which I like to think of as the financial health primarily of a company. But based on your goals and your time frame, just like in as a wealth manager, right? Based on those two things, that's how you determine how you approach the markets. So when it comes down to commodities specifically, like I said, I see it more as an option. I mean, if you're invested in silver, gold right now, great, ride that gravy train. Just make sure you're protecting your downside risk because reversion to the mean is real in any market context.
Yeah, I think that's a good perspective on it. So, um, when I know we talked about a lot of things in the interview. You know, the fact that, and I think one of the challenging things is people always talk about, the gold bugs and the silver bugs of like tinfoil hat, and they think that everything's being manipulated. And I've heard all the stories, and I don't know if they're true or not, but when you start to see this, it kind of makes you believe that they're correct. Don't know if they are, but it makes you kind of believe that. And but one of the challenges is, at least from what I'm seeing, is the markets have shifted. So you went through 15 years where it was tech, the Mag 7, or it used to be, FANG and then Mag 7, and it just changes the name. But basically, it continues along the track of just, that's where everybody's putting their money. But it seems as if that trend is changing. There's a lot of rotation going on in the markets, and certainly materials, commodities have gotten a boost. Um, but usually that means there's something else going on that people aren't seeing yet. And it makes me wonder if we're going to start to see more opportunities elsewhere. Um, I mean, silver went from 100 to 1, silver to gold ratio. Now it's down to like 48 or something like that, or maybe even 45, which is probably a good time to, you know, maybe level things out a little bit based on history. But it does lead me to, commodities are the input for companies, right? And if you're Tiffany's, you have to buy silver, and silver's 4 times more expensive. So does that mean your jewelry is 4 times more expensive? So, or does that mean that they're eating some of that because they have a huge profit margin? So it does lead me to believe that the inflation that we have might start to pick up if you start to see these prices stay high, or other commodities start to pick up. So, Barb, when you're looking at fundamental analysis, are you considering things like this, or are you just looking at the kind of the ratios? Because I think when people look at fundamentals, people have different perspectives depending on how deep they go into the rabbit hole. Some people just look at the ratios and they look at the numbers, say, "Oh, it looks good." Other people really get into the weeds, like hedge fund managers, and they got people sitting outside the parking lot counting cars going in. I don't. I'm sure you're not doing that, but where do you kind of draw the line for how you kind of consider when you're investing in individual stock?
Great question, Kirk. And I have also, right now, pure disclosure, I own a handful of stocks. The majority of our portfolios are in ETFs and mutual funds. But when evaluating a company, I believe the fundamentals are extremely important. I also believe the qualitative story is important. And that's why you read the annual reports, you listen to the management expectations. But point of fact today is I or any investor is not competing as much with other investors, but we are competing with algorithms which have been trained to use the best of the best trading and investing strategies, which means we are starting out at a loss. And that is one of the reasons that picking stocks is extraordinarily difficult today extraordinarily. And so I believe, yeah, look at qualitative factors as well. It's not all in the numbers for sure. Um, but I believe in a pretty wide diversification of ETFs. And that has stood very well over time because I don't know if you all out there have seen what's called a quilt, a portfolio quilt, and it looks like a quilt. And each year, what the creators of these quilts have done is create the returns of a particular asset class: small caps, large caps, value, real estate, metals, whatever. And they rank them according to best to worst portfolios. So you have a chart, and 1 year large cap US stocks have trounced. They have been the big time winners, and say metals have been low. Um, Small caps have suffered, but that changes every single year. So it is very rare to have this, even in spite of the big seven or the most popular stocks. The winners of the asset class race are not the same year over year. So, what does that mean for you as an investor? My advice, and has been for a long time, is you do need to be diversified, and you do need to hold international stocks, US stocks, bonds, small caps, whatever, so that when those assets start rotating, you can participate in the other assets that are growing. Now, that's a way if you want to be a passive investor. If you want to be a more active investor, then yeah, you do want to look at the story and the fundamentals.
Great. So what are your thoughts, Diana? I know you integrate both into your trading. How deep are you going into the rabbit hole with fundamentals?
Mhm. Yeah, I always start with the technicals, like I mentioned, top-down approach, broad market, sector, individual stocks. The fundamental analysis is really the last step that I take when looking at companies to purchase or short sell in some cases. And from that arena, I'm looking at, I think I mentioned, earnings is probably the biggest piece, right? Unless I have a direct play on that earnings outcome and earnings play, which is fun, but I feel it is more akin to gambling. Unless it's that specifically, which is more so the exception, I don't want to hold over earnings. So I'm looking, is there upcoming quarterly earnings announcements? I'm looking at, analyst expectations. Were there some recent upgrades, downgrades? The last 4 quarters, did they beat those expectations, right? Expectations in the markets can be very high. Oftentimes, they're already priced in, especially when you're looking at options pricing and implied volatility. I won't go down that rabbit hole, but we're looking at what those expectations are. Do they typically beat their top line revenue? Is it ascending? What are analysts' expectations? And then I also look at those recent news headlines. Okay, are they expanding? Are they closing product lines? Are there partnerships happening? So I look at those pieces to determine, okay, is there anything that's going to essentially mess up my trade? Because when I go in, yes, it's exciting to be in that trade, but I'm trading the trend. I want it to follow that trend. I'm a swing trader, so as it's pulling back, it's coming back up, it's confirming, or it's high base breakout, whatever the pattern is or the setup is, I'm playing the probability. I want it to continue that trend during my holding period. So if there's anything from a fundamental perspective that's going to buck that, then I want to know. The other thing I'll mention is a lot of traders, when they're starting out, I'll recommend, well, one, definitely start small, but trade what you know. Many people, whether it's products they use or an industry that they work in, they already have a sense and a pulse for that sector or that market. And just like if you've been trading a long time, you kind of have a sense for the overall markets. you back that up with data, but use that discretion in your trading. It just makes it stronger. But across the board, risk management, number one, because just like we said, we know where silver is today. We know where it's been on that 20-year chart we just showed. But no one knows. It's speculative to say where it's headed. So regardless of your approach, whether it's fundamental, technical, just managing your downside risk, whether it's through, tools like stop loss orders, position sizing to max loss and options, or diversification, right, in a long-term portfolio. To me, that's the most important thing.
Yeah, no, that's great. So as we kind of wrap it up, I certainly have a lot of thoughts on this, and I'm just going to give my 2 cents before we kind of wrap it up, which is, when you look at precious metals, I've been following precious metals for years. I kind of geek out on this stuff, and I don't get bogged in. And I think one of the things that people tend to do in this space is they tend to be all or nothing. They tend to be the world's coming to an end. I'm going to have my gold, my gun, my MREs, and I'm going to go live in a cave. Or people just think, oh, it's just what did Buffett say? It's a worthless relic. Um, the reality is Buffett bought silver in 90, I think it was 97. He bought silver and it went up and then he sold it. So he speculated. So he's no dummy, but there is something to one side, which is it doesn't generate any income, but there's another side to it, which is people have treated it as money for thousands of years, and that's not going to stop. We have jewelry, we have silvers in everything now. I mean, it's in solar, it's in it's in batteries, it's in all sorts of electronics now, and the government has deemed it a essential material. So when you start to see stuff like that, and you start to see the global politics shifting, and we're trying to shore up resources. And you have countries that are basically hoarding precious metals because of Basel III, and now gold is a you know it is a was it a tier one asset. So effectively, it's the same as using paper, as using U.S. Treasuries. So people just say, "Hey, I don't I don't like Treasuries. I'm going to hold my gold," and all this stuff is going on, and it's really hard to navigate for the average person. So I've heard the stories about this for years, and it seems to be happening now. And so I'm intrigued by all of this. I'm sitting on the sidelines watching this, and just it's like watching a movie. I'm really intrigued by it all because you always wonder if things are true or not. But when you start to see it happen, it's like, okay, I don't know why it's happening, but it appears to be lining up the way I would think it would if this was happening, right? If what they're saying, if what David's saying and others are saying are true, then what I'm seeing lines up with that. I don't know if it's true. I don't know why silver's going through the roof. I have a sense of why gold is, but we don't know that either, right? You really never know why things are happening because you're not in the bowels of the system. You're not on the trading desk. You're not talking to the people buying. So you really have no idea. You can have a sense, you can have a thesis on it, but the why really doesn't matter, right? It's what's the term? Only price matters. So the why really doesn't matter. But I think it's important to put things into context because there's a lot of shifts going on. If you're one of these people that just buys big tech and just forgets about it, you might want to reassess portfolios. You might want to look at what's going on, why it's going on, or at least the why. Like I said, the why doesn't matter, but you want to at least have a sense of the whys that it could be happening. And if you're not doing it, at least consider it. It's like when we talked about crypto years ago on the show, people were scared of it. And I was like, so put in 1% of your portfolio. Like what's the worst that's going to happen? It goes to zero and you lose 1%. That's like a daily movement in the S&P 500. So when you think of it in those terms, then it's not a binary yes or no. It's a question of like what percent? Is it 0.1%? Is it 10%? Is it somewhere in between? I don't know. But that's something you should certainly consider. Precious metals have been a good diversifier. That's been the case for a long time. Even when it was out of favor, it was a good diversifier. So I don't think it's wrong to consider it for portfolio. But the question is how how much, and that's something you have to determine yourselves. But I did want to mention it because there's a lot of changes going on in the global financial system, and you should be aware of it, and then use that as as data as to whether you decide that you want to add this to, whether you have concerns, if not, but just, you should always consider all options, even if you disregard them, you should at least consider them. So, final thoughts, Barb, and where can people find more about you?
I think the reversion to the mean concept is very, very important. And what that means is eventually most asset prices will revert to their long-term averages. And so, for example, if the long-term average of silver is, $50 an ounce, and now it's trading at multiples of that, well, you've got to assume at some point it'll probably return there. And the same with your stock prices. But the question is not if, but when. And it can take years and years and years to revert to the mean. So make your own decisions after you have gathered enough information about whatever investment strategy you employ. I'm Barbara Friedberg. You can find me on YouTube and at Barbara Friedberg Personal Finance.
Thanks for coming on, Barb. And Diana, final thoughts from you.
Mhm. So what I'd leave listeners with is this. Markets often move before the fundamentals fully show up. And this doesn't mean that the fundamentals don't matter. It just means that timing matters. And timing is one of the most difficult things to do in the stock market. So for investors who want exposure to commodities without dealing with storage, delivery, complexity, ETFs can make sense because they're liquid, transparent, they're easy to size in a portfolio. Personally, that's how I approach commodities. But again, investing, trading, it's so personal to every investor. So depending on your time frame, your risk tolerance, it's really up to you to make the best decision for your goals. I'm Diana Perkins. I'm the founder of Trading with Diana, where I help professionals build wealth with confidence through trading and investing. You can learn more or connect with me at tradingwithdiana.com.
Awesome. Well, thanks for coming on, Diana.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.